With less than 2 weeks to go before the U.S. presidential election, we wondered which sectors and stocks would be winners and losers for both an Obama victory and a Romney victory. And joining me now is Todd Schoenberger, Managing Principal for the BlackBay Group. Todd, welcome to the Wall Street Report. It's so great to have you on the program.
But thank you for having me, Jennifer. Glad to be here.
And we should know for viewers that we're not related, right? Your last name actually has an extra E in it.
Yes, that is correct.
All right, so to kick things off, which sectors and then stocks do you think would benefit from an Obama victory?
Well, it's clear to me, I mean, there's a couple of items out right now, and it seems to be the overall consensus that if he is reelected, you're probably actually going to see consumer discretionary stocks do well, only because there is this feeling that you will have an Obama the feeling of actually taking care, or I should say actually helping out those that are in need. And therefore, if that's the case, you're going to have more people that are spending money, that are going to the stores, such as a Walmart, for example, would be a great winner. And so there is this feeling that if you are going to be able to provide maybe additional, I should say monetary help to those in need, then they're going to be spending the money on consumer staples. So Walmart's a big winner. Target may be as well, only because they will actually be able to receive some type of a trickle-down effect from those type of companies. But you really can start looking at some of the consumer discretionary names that really help or benefit those maybe in the lower income bracket. Maybe even a Family Dollar. That's another great stock to look forward to if an Obama victory is the case.
All right, so then which sectors and companies actually would lose if Obama wins?
Defense, clearly defense would. And it's not just because history shows that a Democratic president tends, especially in the second term, does not bode well for the defense sector, but also you have that looming fiscal cliff. Nothing has happened yet, and we were all suspecting that if Obama is reelected, nothing is going to happen probably deep into 2013. And as you know, Jennifer, we're looking at this fiscal cliff. It's a huge mess, especially for the defense sector, because you have these mandatory cuts there that the defense sector is looking at. So companies like a Lockheed Martin would definitely take a hit. So it's probably a stock you would want to stay away from, or maybe even have a short position going into the new year during a re-election.
So then what about if Romney wins? Is it sort of the mirror image? Does defense actually win? Which sectors would benefit under a Romney victory as well as stocks?
Right. Well, I got to tell you, with a Romney win, I mean, Republicans have always fared very well for the defense sector, so you would suspect that you will see more of that. Plus, you can also think there will be a fresh name that's there. Perhaps there would be some type of a solution, if you will, with the fiscal cliff. And if that's the case, maybe something could happen where these defense cuts are not going to happen. If that happens, then look for big wins in the defense sector. Also, look at the financial sector. I mean, Romney's been very vocal about the fact that Dodd-Frank is not going to be one of those winning policies, if you will, that's going to help the financial services sector. And so you're probably going to have a little bit more of a feeling that the financial stocks, especially the bulge bracket banks, the JP Morgans of the world, Bank of America, again, they will do well if Romney wins.
And which sectors then in stocks would lose from a Romney victory?
Well, with a Romney victory, I would probably then start to turn around and start thinking some of the more auxiliary companies or sectors, such as travel and leisure. I mean, you're going to have so much of you're looking at tax cuts, but you're going to have to balance this budget, and that's part of the issues with the fiscal cliff. So moving on, I would probably stay away from some of the travel and leisure companies, maybe even some of those consumer discretionary names. I know it probably seems opposite to what Wall Street or history has shown us. However, there is this feeling of you do need a fiscal conservative that's in the White House. And if that's the case, people, at least in the short term, are not going to have the discretionary budgets to actually go out and spend and to travel. And so therefore, you probably want to stay away from that sector.
So I know it's always tough to call an election and what's the market pricing in and whatnot, but do you think that the market is pricing in an Obama victory at this point?
Right now, it definitely is. I mean, Wall Street is already gearing up thinking that Obama is going to be reelected. And probably, I mean, the polls do help to support that. I mean, typically in past presidential elections, Wall Street firms are actually looking to see who the front runner is, and therefore their dollars are going to those candidates. Right now, there is the feeling that Obama does win, and a big reason why is because Obama has done I I'm from Wall Street, so I don't want to say it too much, but what he has done is done such a good job of really putting Wall Street and New York in the crosshairs of saying, look, the financial services sector is the reason why we're in this mess. And therefore, when you start selling that, you have 80% of the American population that may actually believe that, and therefore they're going to vote in the incumbent. So Wall Street, even though they don't like it, they're still going to root for, or at least I should say side with the favorite, which right now is clearly Obama.
Yeah, well, you know what's interesting to me, though, Todd, is that, yes, in theory, a Republican, Romney, is fiscally conservative. Typically, that's good for the economy. Wall Street likes that. But if you actually look at the historical performance of the market during a Democratic administration or a Republican administration, on the whole, actually under a Democratic administration, the market has performed better, hasn't it?
Well, it has, but also recent history would show you that these are different times. I mean, you had further Fed accommodation. I mean, now we're in 3 rounds of Fed accommodation. And if you want to add an Operation Twist, you could even say this is a 4th round. So you have a little bit of a juice that's taken place, and therefore that is helping the stock market and therefore equities. The question remains, though, is what happens in that second term, because history will show you that certain sectors just do not do well. I mean, oddly enough, in the first sector of the Democrat that's in the White House, if they actually follow a Republican in the White House, generally defense stocks do well, only because a lot of those contracts were already put in place when the Republican was in the White House. But it's that second term that's always the question mark. So yes, right, history does show us that that first term for a Democratic president does do well. It's a second term where it gets a little iffy. Now, Bill Clinton was, I mean, clearly somebody who was probably more in the middle than very far to the left, as much as President Obama is. And he was really the lone exception. But if you really look at history and you look at the last 8 years, or at least during the post-World War II period, it's that second term of a Democratic candidacy that things can get a little dicey for the stock market. And as you know, Jennifer, these are not normal times.
Yeah, absolutely, Todd. Thanks so much for coming on the program and sharing your insight. I so appreciate it and hope to see you soon.
Yeah, I hope so too, Jennifer. Thank you.
Todd Schoenberger, Managing Principal of the BlackBay Group. And here's a little food for thought. While we discuss how the market will perform and which industries and companies would benefit from either candidate winning, perhaps we should be looking at what the market is telling us about who will win. In 80% of presidential elections since 1900, when the S&P 500 rose in the 3 months prior to Election Day, the incumbent won. The market is up almost 7% in the past 3 months. Take from that stat what you will.